At the end of 2023, insuring a car in Britain officially became more expensive than it had ever been in history. The average quote, £995, up 58% in a single year, 9 quarters of rises in a row. Everyone reported that number, the papers, the news, the forums. But there's a second number in this story, one almost nobody reported, and by the end of this video you'll know exactly where your money went and why the real story is stranger than the headline. If your renewal landed in that period, you remember it. Same car, same driveway, same clean license, and a price that looked like a typo. Drivers who had paid £400 for years were suddenly quoted $700, $800, $900. This wasn't a few unlucky people, it was the entire market moving together in one direction, fast. So what happened? 2 villains, one of them is hiding in plain sight on every policy you have ever bought. Villain number 1, a tax most people have never heard of. Insurance premium tax. It sits inside every car insurance policy in the UK, and you pay it whether you notice it or not. Back in 2015 it was 6%, then it was raised, then raised again. Today it is 12%. It doubled in under 2 years. On a £900 premium, that is over £100 going straight to the Treasury. Not to repairs, not to claims. A tax on protecting your own car. Villain number 2, the cars themselves. A modern bumper isn't a bumper. It is radar, cameras, sensors, a computer wearing paint. Clip a curb and you are not buying plastic, you are buying electronics and the specialist hours to calibrate them. Between 2019 and 2023, the average claim cost rose 37%, from £2,400 to £3,300, and in 2024, UK insurers paid out £11.7 billion in motor claims. A record. So yes, prices rose because insurers charged more, but they were also genuinely paying out more than they ever had. Now, here is where this story changes. That famous £995, that was the average quote, the price insurers put on the table when you go shopping. But the average premium drivers actually peaked at £635, £360 lower. 2 official numbers measuring the same market, and a gap between them big enough to matter. So what is that gap? The gap is the difference between taking the first price and looking. Quotes measure what the market asks. The paid average includes every driver who compared, haggled, or walked. The £360 gap is, quite literally, the price of not shopping around. And then came the part nobody reported. Prices fell. The average paid premium dropped 3 quarters in a row, down to £551 by late 2025. The explosion made every front page, the fall made almost none of them. And even those averages hide the strangest part of British car insurance. Where you sleep at night, take the same driver, same car, same history. In parts of North London, their average premium runs over £2,100. In rural Devon, around £519, 4 times the price for the same person. Same license, same car, different postcode. It is priced on claims data, theft rates, traffic density, but if it feels like a lottery, that is because for you, it is. Put it all together and you get the real rule of this market. It quietly punishes people who stand still. The gap between quoted and paid isn't magic. It is the compounding reward for the drivers who check every single year. Funded in part by the ones who don't. Regulators have even stepped in. In 2022, they banned the worst version of loyalty pricing. That ban had a twist in its tail, and it is a story for another episode. But the core mechanic survived. In this market, attention is money. Now, we run a comparison site. You would expect us to tell you switching always wins. It doesn't. Here's when it doesn't. If you are mid-policy, cancellation fees and lost cover time can eat the entire saving. The smart move is a diary note for renewal, not a switch today. If you have built protected no claims with a claim pending, moving can cost more than it saves. And sometimes, genuinely, your renewal is already sharp and the market can't beat it. Fine. Keep it. Anyone who tells you the answer is always switch is selling you something. The answer is always look. So that is the story the headline missed. Prices exploded, a doubled tax, and cars too clever to repair cheaply. Then prices fell and nobody told you. And through all of it, one gap stayed open, £360 between the asking price and the paying price. That gap doesn't belong to the insurers. It belongs to whoever bothers to look. Once a year, 10 minutes. Next time, the insurance product so bad the regulator stopped it being sold, where 94 pence in every pound vanished. This channel explains Britain's money. Subscribe and never take the first price again.